All right, let's get right into it. The Dow Jones Industrial Average just did something it has never done before. It smashed through 50,000. I mean, that's a headline that should be popping champagne corks, right? But here's the catch. Behind that massive number, Wall Street is practically holding its breath. And today, we're going to break down exactly why this historic new high feels so fragile.
And there it is, 50,135.87. A tiny gain on the day, sure, but a massive psychological win. We are officially in uncharted territory here. And just to put that in perspective, it feels like just yesterday we were talking about Dow 40,000. This is a huge deal.
So, what's with all the anxiety? If we're hitting all-time highs, shouldn't everybody be celebrating? Well, the party is on hold, and here's why. The market knows this entire rally is basically balanced on a knife's edge. It's all waiting on two huge pieces of data coming later this week that could change, well, everything.
To really get why everyone's so nervous, you first have to understand how we even got here this fast. See, this record high didn't just appear out of thin air. It was a crazy snapback from a pretty nasty dip just last week. So what on earth fueled this thing?
It all kicked off with what the pros call a tech sell-off. Last week, for 3 days straight, a lot of investors just started dumping their AI stocks, the hottest part of the market. They were worried things had just gone up way too far, way too fast. It was a classic case of taking some profits off the table.
Now, what you've got to understand is that the rebound wasn't because of some great news or breakthrough. Nope, it was purely mechanical. First, that sell-off completely cleared out anyone making short-term bets. Then, as prices started to inch back up, the folks who bet against the market, the short sellers, they got squeezed and had to buy back shares, which, you guessed it, pushed prices even higher. And the final kicker? Automated trading funds, which are programmed to sell when things get wild and buy when things calm down, they jumped right back in.
And the big trigger for those automated funds was this right here, the VIX. It's basically Wall Street's fear gauge, and it dropped a lot. As soon as those computer algorithms saw that fear was going down, their programming told them to start buying again. So the takeaway is crucial. This whole rebound was about market mechanics and algorithms, not some fundamental shift in the economy.
But if you look just beneath the surface of that big Dow 50,000 number, you see a market that is just deeply divided. It really is a tale of two completely different stories playing out at the exact same time.
And this is the perfect example of that split. On one side, you have the healthcare sector, which is getting absolutely crushed. I'm talking major companies hitting lows we haven't seen in years. But then, on the other side, you've got the supposedly boring insurance sector, which has been quietly rallying to new 52-week highs. What a contrast, right? So let's dig into the trouble with healthcare for a second. It's basically a perfect storm. You've got companies like Molina Healthcare getting hammered by skyrocketing medical costs. You have the industry giant, United Health, fighting off regulators. And to top it all off, a drop in Obamacare enrollment is hurting the whole sector. These aren't just one-off bad days. These are deep, structural problems.
Now, compare that mess to insurance. A recent Barron's article put it perfectly. In a market this nervous, boring insurance stocks might be the answer. Companies like Travelers have been putting up solid numbers, and their stocks show it. They've become a sort of defensive, safe place for investors who are worried about all that tech volatility.
Okay, so all of this, the weird rebound, the split market, it's all just the opening act. It's all leading us to this week's main event. We're talking about the two data points that have the entire market on the edge of its seat. This is the real reason for all the anxiety.
So here's the week's schedule. After some corporate earnings kick things off, the real fireworks begin. On Wednesday, we're getting the delayed jobs report for January. And then on Friday, the big one, the delayed January CPI report, which is our key measure for inflation. Believe me, these two reports are everything right now.
So why do these two reports matter so much? It's actually pretty simple. The jobs report tells us how hot the economy is running. If it's cooling off, the Federal Reserve might feel good about cutting interest rates, and stocks love that. But the CPI report on inflation is the total wild card. If that number comes in high, all those hopes for rate cuts could just vanish, and this market could give back all its gains just as fast as it made them.
Okay, so that's the setup. A record high built on a kind of shaky foundation, with a massive data showdown just a few days away. So the natural question is, what do you do? I mean, how do you even play this? Well, there are basically three ways to look at it. If you're playing it safe, you stick with those defensive stocks like insurance that are already working. If you're feeling neutral, you just sit on your hands and you wait for the data before you decide if it's a good time to buy into that tech rebound. And if you're aggressive, you get ready to pounce on tech stocks if the data looks good. But, and this is a big but, you're using stop losses, those automatic sell orders, to protect yourself just in case things go south.
But what do all three of those strategies really have in common? They all depend on what happens on Wednesday and Friday. And that brings us to the single most important takeaway from all of this. In a week this critical, with a milestone this fragile, sometimes the smartest move is to do nothing at all. The best strategy is to simply wait for the data, because those two reports are going to tell us everything we need to know. Is Dow 50,000 a new foundation, or was it just a temporary peak right before the next fall? We're about to find out.